Hi traders, and welcome to my video on the Accumulative Swing Index indicator, where I'm going to show you how you can use this indicator to capture moves like this one for over 550 pips, and this one for over 350 pips. Okay, so the Accumulative Swing Index indicator is basically used to evaluate the long-term trend and find potential reversals. Okay, one thing that differentiates it from a lot of other indicators is it actually uses the open, close, high, and low prices. Okay, whereas many indicators just use the closing prices. Okay, so this is the MT4 trading platform. I have a pound-dollar 1 hour chart open. The reason I'm using a 1 hour chart is because I prefer longer term chart time frames, such as the 1 hour, 4 hour, daily, weekly, and monthly. Reason being is that they contain more price data, which from my experience gives more reliable trading signals. I'd much rather capture a move like this for over 500 pips than fight all day long on the 1 minute and 5 minute chart, stressing myself out trying to scalp a few pips here and there. Plus, you pay more in brokers' fees, spreads, commissions, maybe get slipped out of a trade if trading shorter term chart timeframes. Less time chart watching is good, especially, as I said, when you can capture big moves like this using a very simple strategy, which I'm going to get into now. You can use this strategy on any time frame and also any trading instrument, so Forex, stocks, cryptos, commodities, indices, etc. So this window here below the chart, you can see the Accumulative Swing Index indicator has been applied. Okay, I downloaded the indicator free of charge online for the MT4 platform, so you can probably find it for the platform that you're using. I will say that it's not a make or break indicator in my opinion, for reasons that I'll go through in this video for you now. You can actually capture these moves without it, but let's get into it. So the first thing I do is I draw my support level. Okay, you can see the market form this support level here. Okay, price has rejected it multiple times, following on from this downtrend. So what's happened is we've just had a big downtrend, as you can see here. Okay, and we just draw support and resistance. Okay, so what's happened here is we've got a downtrend and there are traders getting caught in a bear trap. A bear trap basically means traders are still trying to sell into this trend, but they're selling at the low. Those who were in earlier up here somewhere, they're going to be taking their profits around here once they see this stagnation. Okay, and then this just causes say stop losses and profits to be taken out around here, causes this shift of momentum to the upside. And then as we see the market make these higher lows, okay, we know that we're in an uptrend. Okay, so we're only going to look to place buy trades. Okay, in fact, if you go to the more shorter term here, this would have been a good breakout. Very aggressive entry. It's quite early on to take that trade, but you could have traded that breakout or waited for a breakout of this perhaps more significant level of resistance, a breakout, and then you can see that resistance then comes support, just emphasizing the strength of this level. Traders taking perhaps long trades off of a bounce from this support line. Especially here we have this hanging man, if I just zoom in there, hanging man candlestick pattern, also a 3 inside up candlestick formation as well. So lots of bullish signals there. Potential trade either there on the pullback, there on the breakout, or aggressive here on the breakout earlier on. So you're thinking, where does the Accumulative Swing Index come into play? Well, those examples there, I'm just showing you don't necessarily need any indicators to find good trades, okay? Just as soon as I see the market has turned around and you have these lower highs, I mean, I can take a pullback anywhere. It doesn't have to be because the indicator tells me to. I can see resistance here. The price pulls back. I'm going to look to trade a breakout, and you can see from that big breakout candle there. Okay, see this breakout candle? So traders are watching these levels, and there's no coincidence that that resistance then becomes support. Okay, so you can trade the breakout, you can trade the pullback. Simple as that, really. Higher lows, we're in an uptrend. Got a wedge pattern formation as well here. Okay, so prices can, if I can get that, that's frustrating. Do it like that. As you can see, prices consolidating within here. Big breakout, higher lows, ample opportunity to enter on this trend. And we can just do the same all the way up. So you can see there, You don't want to buy at the peaks. Okay, well, I don't. You can do what you like. I'm not going to buy after a big move like this. I'm going to wait for a pullback and then look to trade on a breakout. So that resistance there, breakout, resistance becomes support, continuation. Okay, ample opportunities. So you can just draw your ledge. Breakout, good trade. Breakout, okay, resistance, breakout, resistance becomes support. Another hanging man, bullish hanging man candlestick pattern. Higher lows. So we're trading in the direction of the trend, and we can capture in trends good moves like this all the way up. What you don't want to do is you don't want to end up buying too high, so by the time we get around here you have to think perhaps the move may be exhausted, although in saying that there's a little bit left in the tank. One final push there, okay, off this level of resistance. But then, you know, you could have, maybe after that big move, you could have traded that breakout there. Not the ideal entry, but if we zoom out and look at the overall picture, by then we've already had this move. With so many trading instruments and time frames to trade, you wouldn't necessarily want to plan on buying at the top here. What you want to do is you want to get in early as possible, whether that's super aggressive on the first, you know, buying right at the low on the first breakout, or perhaps being more conservative and waiting for the trend to form, then a pullback and a breakout. You can see these are the biggest ones, like big breakout candle there, big breakout candle here, big breakout candle there, breakout there, and then things, you know, you can still, there's still gas left in the tank, even as far up as here. I mean, you know, some traders were still pushing it up here. Okay, you can see that resistance becomes support, and still ample opportunities all the way up, and then you risk getting caught in a bull trap, which is basically the opposite of a bear trap. You won't be surprised to hear. So what happens in a bull trap is traders open their chart now up here. They see this move and they want to buy, but they don't realize they're buying at the high. Only one thing is going to happen then. They're going to get their stop losses taken out. Traders who were in down here are going to take profit, and the market's going to switch direction. So on these breakouts, like let's just say we took, what we're going to wait for a breakout of this level here, okay, and then we're going to wait for a pullback and enter on this breakout here, okay, and then I'm going to place my stop loss just below the low there, so we're looking around 20 to 25 pips, okay, which is relatively tight for the 1 hour chart time frame. And you consider that this, you know, almost 500 pips of profit potential on the way up there would have been a good trade. What I would have done is I would not have left the stop loss there. As price is moving up, I would have just trailed the stop loss and put it below the low, 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 and just try and maximize the move as much as possible. So basically let winning trades run, and if price turns around and takes out a stop loss for 20 pips once, twice, 3 times, but down 60 pips, we're not going to cry about it, because we know we stick to the plan and have discipline and don't trade with negative emotions, fear, anger, greed, revenge trade, FOMO, fear of missing out. We can eventually capture a big trend, which will make back those 20 pip losses or 25 pip losses, 15 pip losses, whatever they are, make them back and a lot more on top. Okay, so it's okay to take, you know, cut losing trades short, being confident. If we've got smart money management, when we do catch a big move, we ride it as much as possible and maximize profit. Okay, so make back them losses and more. What I'm not going to do is I'm not going to take this breakout trade here with the 20 pip stop loss, get excited around here and exit, because you're just leaving too much on the table. Okay, and of course you can re-enter, but every time you re-enter, you risk getting your entry wrong. Okay, if you want to close part of the position on the way up, you can of course do that. You know, close 20%, close another 20%, let the rest ride. Just depends on your own preferences. Okay, I've waffled on completely. Okay, this is the Accumulative Swing Index video. Don't get twisted. It's just that it'd be rude for me not to point out these things. I'm not going to sit here and say this indicator is amazing, use it like this and you're going to win every trade. It's just not the case. But in saying that, if you insist on using indicators, the Accumulative Swing Index can be good to help with these sort of trades. So let me cover the aspects of it. So first of all, when the indicator is making higher lows, okay, it means the market is probably moving upwards. Okay, you see the indicator is making higher lows. We have this moving upwards, exactly how we drew the trend line. This is why I don't rely on technical indicators, because I could have just looked at the chart and seen that. Okay, So it doesn't really have any advantage for me over just a simple trend line that I could draw on the chart myself. So that's one aspect of it. The direction that it's moving in can help establish the trend direction. Okay, just as if we look at this scenario here, you see the indicator making lower highs, the market's moving downwards, but we can do that and it tells us exactly the same thing, right? Okay, don't be lazy, just draw your lines, simple. One thing it does good as well is, you see when it's high up here, it can mean that the price is overbought. As you can see here, it did start to fall to the downside. But again, we can look at the chart and we can see that, you know, exactly the same in this scenario as well. It's down here, market's probably oversold, it is oversold, but if you can look at your chart and use your eyes, you can see that that's the case as well. Okay, so not really giving me anything that I can't do myself by looking at the chart. It can be good for helping you with pullbacks as well. So once we know that we're in an uptrend and we're going to look for you know, entering long trades in this uptrend, you can wait for the indicator to make new lows. So for example, it goes up here. Okay, so we've got our higher lows, the market's trending up. And then when the indicator pulls back or goes down against the overall trend where we're looking to trade, that can be our pullback point. Okay, so pullback here, and this is, we're going to look to enter on a pullback and a breakout. So we have a pullback, and when the indicator crosses above, just around here, you can look to enter on a breakout of that area there, which it would have been a greatly timed entry into this trend here. But funnily enough, it's exactly the same almost as our resistance line that we drew. We didn't need an indicator to do that for us. Although I do appreciate some traders like to have things sort of visually confirmed for them, shall we say. But you may miss such moves if you just only rely solely on indicators. But nonetheless, so it keeps making these higher lows. So we're looking for pullbacks, and you do find, so you've got a pullback there. Okay, indicator crosses above. It's a breakout trade, which is identical to the one that we picked. Pullback here. Okay, it's going upwards, has a pullback. Breakout to the upside is exactly the same again as that breakout trade there. Okay, I think you know where we're going with this. Pullback, cross back above is exactly the same as a breakout. So we basically could do everything the indicator done ourselves by just drawing lines. If you want a quick fix, you can use an indicator for it. This one as well. So pullback, breakout. Okay, we did come into some resistance, but perhaps we wouldn't have bought into that resistance level anyway. Okay, we would have waited for a breakout. But if we did, stop loss below the low still would have been a valid trade. However, the indicator is high. We've had all this move. Why would we want to buy at the top? I personally wouldn't. Just wait for another trend to start forming. And then as it starts making these lower highs, we're going to start looking to perhaps trade in another direction or wait for a trend to form. Okay, so they're the aspects of the indicator, the the higher lows or the lower highs for trend direction, spotting pullbacks and even breakouts. Okay, can help you avoid trades if it's too high, if it's at a peak. Okay, don't want to enter buy at the higher, sell at the low. We just look at this downtrend and can apply the same principles. So we can see here that we've got this level of support here. It's quite strong support. Just mark the break below, which is around here. Okay, it's not a bad trade to enter into this trend. You know, if our stop loss is above the recent high, we should be okay. If not, there's always another pullback. Okay, and again, enter on a breakout below, stop loss above the high. For this trend, what were we looking at? So we've got our support level there. Okay. As price made these lower highs here, okay, they had a nice just draw that support level. That's strong support. Remember, this is a 1 hour chart, so there's plenty of data included within them. This probably wouldn't play out the same on a 1 minute or 5 minute chart, just not enough data, too much noise. But then we have the breakout down, and then funnily enough, that support becomes resistance. So whether you were aggressive and traded the breakout, risking a fake out, which can, you know, catch you out, could have waited for a pullback. Pullback won't always happen, but the pullback does touch this support come resistance, and they can enter there. Or the more conservative, just wait for a continuation. And again, you get an opportunity to trade a breakout down there. So that one there. Okay, which is in fact, yeah, you can see the lower highs on here starting to move downwards. We're at a high, which is good because it means that we're selling at the high. Again, there's a potential pullback there. That's probably a support level there. Lots of consolidation here. It's not a pure pullback. We start to see we're in more of a range by this time. But eventually the support does become a resistance level here. And there are opportunities to sell into this downtrend. Okay, again, we can draw our support levels. Nice M pattern formation there. Big breakout to the downside, okay? In fact, probably looking more like this. And then that area of support becomes resistance here, so you can either enter the breakout or wait for a pullback. The pullback won't always happen, okay? So you might miss opportunities that way, but as I said, there will be more opportunities later on. Lots of support here and a big breakout to the downside. No coincidence. Traders are watching these levels. As you can see later on, this support then becomes resistance, resistance. Okay. So ample opportunity. You can again use the Accumulative Swing Index. So to draw your support in a downtrend, wait for a breakout of the support level. Ties in nicely with that breakout trade there. I appreciate the charts are maybe getting quite messy now. However, we'll just pick out this support there and a breakout to the downside again, tying in with the support level we manually drew on the chart. With good money management, let's just say we took a breakout trade up here somewhere, stop loss above the high. We could have trailed our stop loss above the highs all the way down and maximize the move as much as possible until we start seeing the higher lows or the consolidation. You might want to consider taking profit then. Okay, hopefully you found something useful in this video. As I said, you can use this on any trading instrument and time frame. The higher time frames, in my opinion, tend to give more reliable signals due to the amount of data included within them. Do appreciate you watching. If you can like and subscribe, that'd be great and help my channel, and I hope to catch you on the next one. Take care.